I want to especially welcome every one of us to this afternoon session. It is indeed a privilege to hold this class. How is everyone doing? It's been 1 week plus. Today is the 6th day of jamming back to back, and we're having fun. Okay, so I think everyone is fine now. So we're going to be discussing the indicator-based strategy. So I'm going to be using moving average, crossing, and my MACD. So those are two indicators I'm going to use. And today, the idea behind this is that we need to find trading for, basically for find tradable opportunity for basically day traders, and scalpers. So basically, we're looking for opportunity for day trading. And for scalpers. So if you're going to be scalping, there's nothing wrong with scalping. I still scalp. Scalping is a way to build your capital, especially when you're starting off with small money. You want to build your small money. You want to take a short position. You know, take this one close $1, take this one close $2, take this one close. By the time you take 3, 4, 5 trades, you made about $10. That's enough to pay your bill for that. They pay some small bill, buy recharge card, buy data, pay transport, move yourself around, and then solve some of your questions. So there's nothing wrong with scalping. In fact, I always have a scalping account. No matter, I always have scalping account where I, draw money, buy fuel, do small things, drive around, fix your car if your car breaks down, and do some small. So scalping is one thing I will never stop doing, guys. Me will never stop scalping. Do I have a scalper in the hand? If you have a scalper in the hand, put 333 on the chart. If you're a scalper, give me a 333. I want to be sure I have people like me. Okay, so I have not started, so I'm just laying foundation for my strategy. So we're going to move on, go to our charts where we can have this sorted out on. I'm not doing this on MT4. You can do this on MT4, but again, it doesn't really come out well for me on MT4. So because of that, I don't do this on MT4. I do this on TradingView. So I'm going to go to chart so that we can see how to set up this and possibly trade with it. Go through this. Guys, subscribe to this channel. If you're on this class and you have not subscribed to this channel, you've not liked our YouTube, I don't think you're doing us any services. So you're doing us a great disservice. Just like our YouTube, so that you'll be the first to get any YouTube video we upload or any content we create, you'll be the first to say it, subscribe, like it, share. Very important, if you're not sharing it, you're not helping us. Help us get the visibility. It takes human beings to gain visibility. As more people view this video, YouTube is going to rank it up as a very useful video. That's the only way YouTube will know the videos are useful. So help us. We ask you today, just go like our YouTube channel, subscribe to it, and then share it in your community. People can see it and like it. They are helpful video. So quickly, this is the strategy I'm going to set up now. So I'm going to delete everything here and start all over. So removing this. So I have my plain chart, nothing on my chart. You can see that this is my trading view. This is Euro USD. You can choose any other currency. Click or you select Euro USD. It's your choice. I'm using Euro USD from under the particular broker, this Forex broker. Under, so I click on under, so it brings me here. I can change any time frame. This strategy is very effective for 15 minutes, for 30 minutes, and for 1 hour. It's equally, you can use it for 5 minutes, 15 minutes. These are time frame you can really find effectiveness. So I'm going to use this for 30 minutes. So on 30 minutes time frame. So I'm going to add my indicator. Here you have my indicator. This is my indicator here. So I click on my indicator. Here I will type MACD, MACD. Now, the full meaning of MACD is moving average convergence divergence. That's what it means. MACD means moving average convergence divergence. So I click on it. So my MACD has already dropped. So the next indicator I want is my MA crossing. MA means moving average cross. Can you see that? Here it is. So I click on MA moving average cross setup. So good, I have the strategy set up. So I go to change the setting. If you come here, bring your cursor around here, you see MA 920. You see, you can hide it. This is the setting. So I click on the setting. Now, my short MA, I change it to 4. My long MA, I change it to 10. Then I go to style as the input. On my style, the short MA, I like it to be red, so I change it to red. And then see this line, I increase the thickness of the, look at the line here, I increase the thickness of the line. And I go to my long MA. I want to make it green. It's fine with green. I increase the thickness. So we're good. Then the crossing is a blue line. So I leave it at blue. It's fine at blue. And as we say, okay. You can see that every time it crosses, the red crosses the green, it provides opportunity for a buy. And guess what? You can ride it all the way. You can see that? Great. And anytime it crosses, it provides opportunity for sell. You can ride it all the way. Now, if I most time look at it from here where it crossed, so this point is about 40 pips. That's massive. Gives you about 40 pips. Let us assume you take 20 pips. You're already out with your 24 pips. You're balling. Okay. Now, the MACD, I go to the MACD. I click on setting. This is the setting. Click on setting. Now, my MACD, the MACD itself, I like the MACD to be red. So I change the MACD color to red. Same thing I did here. I change the thickness of the line to be bigger, the second one. Then I go to the signal and make the signal a green color, change the signal to green. I want to have a uniform line, so you know I do the same thing here. Good. Now I have my MACD this sorted out. This is fine. So nothing more, and I'll just say okay. Finish that. We're good. So I can start now. This is on 30 minutes time frame. I can go as much as 1 hour, 4 hours, the case may be. Now look at this, is 4 hours. So sometimes 4 hours, even the daily can give me an overview of what the market is saying. Look at it on daily time frame. Price is still going up. Can you see my MACD is still looking up? Can you see my MACD is still facing. What's happening here? You can see my MA. My MACD has joined here, so something happened to my chart, so my MACD has come to join here. So I take down the MACD. So here we are. This is my chart. So I'm going to add the MACD again. So I've added the MACD again. I'll just come and change the setting. Guys, you just need to be careful how you drag your MACD. This is green. The line is thick. And that's the signal. I use green for the signal, and for the MACD, I use red. And increase the thickness of the line. So good. So I can say, okay. So here we are. This is on daily time frame. So strategy is set up. How can I use it? I'm going to show you how to use it. So I go to this, my daily time frame. Then you see that this was happening. My price has broken all support, everything is up here. So what's going to happen to here? Now, we're not looking at the overall direction of the market. Market has been showing a strong upward direction. I'm just looking for how can I scalp and make 10, 15, 5 pips here and there and make up. That's what I'm looking for. I'm not looking for where market is going to. I'm only scalping. So my best time frame for scalping is 5, 10, 5, 15, 20, 30, and 1 hour time frame. So let me go to my 1 hour time frame. On my 1 hour time frame, I'll see where is this market going to. Now look at it. On my 1 hour time frame, price broke the green line and is dropping down. So what do? I wait for the first candle. This is the first candle that formed after that. Okay, this is the first candle that formed after it broke. This is the first bearish candle. So condition number 1, wait for the red line to break or cross the green. See the crossing here. This is the crossing. You can see the crossing. This is the crossing. You must wait for the crossing. It's a blue crossing. This is the crossing. So here is the crossing. This is the crossing here. As soon as it crossed downward, we're setting for a sell. Now the first candle that's formed is the red candle on 1 hour time frame. See the red? So from here, I'll pick my horizontal line. I'll pick my horizontal. I'll put it on top of that candle. Now you can change the color of this to anything. The black, the blue. Let's put it at blue for fine visibility. So I put it on top of that candle that after the first bearish candle that signifies is I put it at here. So this is the candle. So where will be my entry? Remember, if this candle formed, this is where it ended. This is where it ended. Boom, it's giving me a direction. This is where I enter this trade. But my stop loss is going to be 10 pips above. Now, again, depend on what you use as stop loss. Usually, I look out for 10 pips above. Remember, what I'm looking for is 10, 20 pips. So I'm going to do 10 pip above this entry. So 10 pip above this entry. Okay, this is 16. This is 10 pips. Can you see the 10 pips? This is 10 pips above. Sometimes a lot of person want to put it above the next high if you're selling. This is the next high. So you can just put the 5 pips above this next high. It's your choice now. This is way I would recommend. Put it 5 pips above this high. So I'll look for 5 pips above this high and I'll put it. What I'm saying, price will need to get back to this high again and do 5 pips. It means that market want to continue to go up. I want to take a minimal loss. That's one way to set it. So one way to set it is to set 5 pips above this high. This is the high. So you're going to use the wick of the high. So I'll just calculate 5 pips. Now this is 5 pips above the high. But if the high is really high, for example, this is the high, it's very high. So I want to look at the first candle that gave me that entry. On top of the candle, I'll do 10 pips. If I do 10 pips here, it will give me 10 pips. Now, remember, you're not going to be emotional about it from here. 10 pips here is about the same thing. So here will be my stop loss. So I need to put a stop here. So I'm going to put a stop here. So this is where my stop. Let me measure again, I'm sure. From here to here, is it 10 pips? That's about 10 pips. That's 10 pips. So that's 10 pips. So my TP is going to be 20 pips. So I'll put 20 pips. Now this is already 30 pips. So if my TP was 20 pips here, guys, I just won that trade. Yet my reward to risk ratio is 1:2. I'm risking 1 to get 2. I'm risking 1 to get 2. So that's the trade. So I already have my trade running. This trade would have been a strong win for me. Now I'll wait again. Remember, now when should I exit this trade? When it hit my take profit or when there's another crossing? Can you see when there's another crossing facing up, I will exit the trade. Now, if you want to be on this trade for a long time, now I could take my stop loss to as much as 30 pips. Remember, there are no rules It all depends to you. What stop loss can you tolerate? Now, for anyone doing anything within 5 minutes, I want to recommend those short stop loss 5 pips, 10 pips. Now look at it. This is 5 minutes. You can see if I enter this trade, did you see another crossing here? So I would have exited this trade here. If I enter here, and as soon as I see this crossing, I will exit with my profit. Let's see. If I entered here with this crossing, this is the first cross, this is the candle here, and I got in here. So this point is 20 pips. When price came back and there's a crossing, I will exit with 13 pips profits. I'll quietly leave with my 13 pips, take profits. Now, from here, I'll start looking for another trade again. So I'll probably that entered is sell after this cross. And then the first bullish candle is this. At the close of this candle, I'll enter this trade. And guess what? We'll be riding it up to here. This is about 12 pips. There's no crossing. The first crossing I've seen is here. I will exit with 3.5 pips. That's what it is. Remember, I had about 20 pips here, about 12 pips. I'll exit with my 3.5 pips. Now, this is still crossing the up direction, so I could still say yes, it's a crossing the up direction because market tried to cross, but it crossed back against the up direction. So I could stay 12 pips. Now it's less than 12 is about 6.9 pips. So this is just scalping the market. Anytime it cross up, you buy, you cross, and you look at your MACD too. Look at the MACD will always support. Look at it. Here, I got the crossing here. But it took a while before MACD crossed. Let me use a vertical line for you to see it clearly. Now here, this is where I got the crossing, but this is where I eventually entered the trade. Here. Here is where I got the trade. Now look at it. My first crossing, this is where I found a bullish candle. At this some point was where MACD crossed. Can you see the coincidence? MACD crossed here. I got my first engulfing candle. This is where, so it's a double confirmation. I have MACD confirming for a buy, and I have my first bullish candle. So this is where I entered the trade for a buy. Now someone will say, oh, it will be a lot of profit to enter here. Yes, you can enter here and return and start going there. How about that? So you want to find something really solid. And guess what? From your price went from MACD until here, MACD crossed back here. So here will be a good place to exit. Now look at it. Here will be a good place. But then I want to exit with the crossing of the MA. The MA crossed here. So I will exit here. If I wait for the MACD crossing, I will further deplete almost around the same zone. So I like to live with this exit. Remember, I'm scalping. So you can live with the MACD crossing or with the MA crossing. Any of the crossing is fine, or it hits your take profit. So 3 conditions to live: it hits your MA crossing, it hits your MACD crossing, or it hits your stop loss or take profit. Then you can exit. When do you get into the trade? When your MA crossing, 1, gives you an indication, you wait for the MACD to cross 2, and at the same time, you must find a bullish or a bearish candle in the direction where you're going to. So condition number 1, condition number 2, and condition number 3. Once 1, 2, 3 are checked, you buy. And then here for a sell, 1, 2, you get this checked, crossing 2, MACD cross 2, and then my first bearish candle, I sell. And now as it begins to go down, I'll hold my trend, put my stop loss 5 pips above the next high. This is the high. So I put 5 pips above if I'm using my high. But if I'm using stop loss, I could use ranging from 10 pips to 30 pips on top of the candle I bought from. The candle that gave you that entry at the top of it for a bearish candle, and but below it for a bullish candle. Now I'm going to stop here and take questions. If you have questions, I'd just like to take your question.